the reason you should look at both, because people ask me all the time, they're like, why do you take on equity partners? Like, you're just giving away the profit and you're fairly experienced. You have access to capital. So why would you do that, right? Because if I can borrow the money at 12%, why would I give away a portion of my equity and give up more on that? But there's a benefit to it. So one is that debt is debt. So I can say anybody that lends me money, I will pay it back. One way, shape, or form, they will get paid back in whole. With an equity partner, they're partnering with me on the house. And if something goes wrong, and let's say I have 10 projects going at the same time, and the market drops 20% for whatever reason, 2008 happens again. If all 10 of those are in debt, and I have to write a check for $50,000 on each one of those houses, I'm going to owe 500 grand by the time I'm done selling these houses, and I have a big hole to go into. If I have 5 in debt, then I owe 250,000, and my equity partners, unfortunately, are taking the hit, but that's kind of what they signed up for. And so it's a way to balance risk, because you don't want to get too heavy into one bucket, and that's why I always balance it out. And so it allows me to reduce my cost of money when I borrow, but also get my lender and my partner a really good return. And so it's a really win-win picture. The hard money in the private money lending side pays me this high interest, which actually it balances out my total cash investment between my rentals and my hard money, to where on my portfolio between houses and cash, I can hit 18, 19% and get growth. And so that's the real benefit of it. Like, why do you lend the money out at 12% when you're making 30, 40% off flips? It's that time value of money, but it's about balancing and setting up that long-term vision. And it's a great thing that you can do.